Inflation is back with a vengeance, and it's time to break down the numbers for August 2025. The cost of living is rising, and it's impacting our daily lives. Let's dive into the data and uncover the key drivers of this inflation surge. Inflation accelerates in August. According to the Bureau of Labor Statistics, the Consumer Price Index, CPI, rose by 2.9% in August, compared to the previous year. This marks an increase from July's rate of 2.7% and is the fastest annual inflation pace since January. Mark Zandi, chief economist at Moody's, warns inflation is uncomfortably high and accelerating. We should expect further acceleration over the next year. Tariffs, a major contributor to rising prices. Economists attribute the rise in inflation to tariffs imposed on physical goods. The CPI tracks the prices of various consumer items, and economists highlight the impact of tariffs on categories like household furnishings, appliances, apparel, and recreational goods. For instance, apparel prices, though relatively stable over the past year, have seen a sharp increase in their annual inflation rate in recent months. This is largely due to the significant rise in tariffs on clothing imported from Asian nations, as noted by Zandi. Groceries, sticker shock, and tariff impact. Grocery prices are also on the rise, with an annual increase of 2.7% in August. This is the fastest annual pace since August 2023. Tariffs may be a factor here too, especially for foods like coffee, sourced from countries like Brazil and Vietnam with high tariff rates, and fruits and vegetables from Mexico, according to Zandi. Beef prices have also caused sticker shock for consumers due to short supply and steady demand, as reported by the Wells Fargo Agri-Food Institute. Services inflation, stalled and unbalanced. While goods inflation is on the rise, services inflation seems to be stuck. Disinflation among services has stalled, meaning services won't counterbalance the rising goods inflation, as explained by Sarah House, senior economist at Wells Fargo Economics. Electricity prices, for example, have increased by more than 6% since August 2024, largely due to the strong demand created by the explosive growth of data centers, as Zandi points out. Travel prices, picking up. Travel prices have also seen an increase. Airline fares rose by almost 6% from July to August, and lodging prices increased by almost 3%. House attributes this to consumer demand, as cautious consumers pulled back on travel purchases earlier in the year due to economic concerns and federal job cuts. Downward pressures on inflation. There are some factors that could bring inflation down. The labor market has cooled, which reduces wage growth, and consequently, the need for businesses to increase prices. However, the Federal Reserve's expected interest rate cut next week to support the job market could keep inflation elevated, as economists warn. And here's where it gets controversial. The impact of tariffs on inflation is a hotly debated topic. While economists generally agree that tariffs contribute to rising goods prices, the extent of their impact and the potential alternatives to address inflation are points of contention. What do you think? Should the Trump administration's tariff policies be reevaluated? Or are there other factors at play that could address the inflation issue? Share your thoughts in the comments.